Hey everybody, Brian Shannon here from alphatrends.net. Today is Friday, June 20th, 2014. It was another great week for equities. Let's take a look at the numbers. These numbers aren't 100% accurate. As you see here, I have a little asterisk. The S&P 500 today went ex-dividend, paid a dividend of 93 cents. So when you add that back in, the S&P was actually up 43 cents for the day. But I do these numbers on a non-dividend adjusted basis. So this is just the equity performance. Year to date, we're up 6.1% in the S&P 500, not counting dividends, which add another couple percentage points. But we had a positive week for the S&P 500. The Russell 2000 was really outperforming once again, up 2.3% as it took out a level of resistance. And gold got a lot of headlines. It was up 2.8%. So let's take a look at the markets here and see where we are and what is potentially ahead for next week. We have, again, the S&P 500 is at an all-time high here. You can look at it and say it's extended. You can look at the VIX and say the VIX is too low, but prices keep going higher, and that's the only thing that matters here. So the S&P 500 this week cleared that level that we were looking at, right at 195. That's the level we said if it got back above there, bulls would be in control, and we would have more confidence that this market could continue to hit new highs. You see what happened here was we saw the 5-day moving average flatten out, and we made a higher high above a rising 5-day moving average, and that's where it made sense to become bullish. Now next week we have a little bit of support here at 195.70, which will be important to hold for just the very near term, and then we'll be looking at that 5-day moving average. But I don't think any real damage gets done to this market unless we're to drop below, for the intermediate term, below 195 will get me a lot more cautious. For the Nasdaq, Nasdaq underperformed a little bit this week. It was only up a half of a percentage point. You can see of all these numbers here for equities, that was the lowest number, but we did clear that important level of prior support, which then turned into resistance, and now is trying to hold as support once again. And let's drill down just a little bit further on the 10-minute time frame. We can see we've got a rising 5-day moving average, and this band of support in here has been, or should be, what it was in the past was 92.50 to 92.60, and we're holding above that. So for the Nasdaq, it still is, in my mind, kind of digesting this big run that it's had through time, and I would only be concerned about it if it was to get back below about 92. Breaking back down into this range wouldn't be a bad thing, but breaking below it, I think, would be reason for a little bit more concern, and you probably notice yourself getting stopped out of a lot of things if that were to happen, and that's what stops are for. They're there to tell you, hey, these things are pulling back. If you have your stops in the right places, which is above higher lows, then you have to manage the risk on the individual stock, not on what you think the stock relationship is to the index, because a lot of times we can see stocks move higher without the index, and these indexes have been kind of back and forth this year, with now the the Russell 2000 this week really catching up a little bit and outperforming by being up 2.3%. We got bullish on these on the Russell 2000 a couple weeks ago as it crossed this level and went back to cautious last week, and as I mentioned to subscribers, getting back above 116, 116.20, that's what it would take for me to get bullish. That's where I suggested a new purchases with a stop just below here. So now that stop should go at about 117, and I don't think there would be any real reason for concern in this market unless it was to get back below probably that 116 level once again. So we've got a strong uptrend, obviously, here on the intermediate term, and on the daily time frame, we're getting a lot closer to the new highs to join those other indexes. Not saying it will happen, but for right now, we've got the higher lows to place our stops under, maybe even here if you wanted to. It all depends on your time frame and what your comfort level is as far as pullbacks and risk management. So I don't see any reason for these markets not to continue higher. What we have to do in a bullish environment is not try to pick the top, but instead to manage our risk and listen to the message of the market that's broadcast over the higher highs and higher lows. And the semiconductors have been really resilient here over the last month. If we look at a 30-minute time frame, that really best represents it here. We can see that over the last month, we've had this real solid uptrend, higher highs and higher lows, and the entire time, the 5-day moving average has had an advancing slope to it. So again, when we have a rising 5-day moving average, the intermediate term trend is considered innocent till proven guilty. This market market is right up at highs here, and the only thing that would concern me is if we were to get below about $48.70. That will be the level to watch next week. If we drop down to it, and then maybe we would rally up and find some resistance at a 5-day moving average that just starts to decline, then some more aggressive traders, I think, could maybe look for a little bit of mean reversion and profit from some shorts. But it is counter to the primary trend, and those trades typically aren't hugely successful. The financials we saw this week came down to the prior resistance. It found support in that prior band of resistance, along with the rising 20-day moving average. And as I mentioned to subscribers on I guess Tuesday, what we were looking for was for it to pull back, test the 5-day moving average, then make a higher high. That's exactly what we had, and now the buyers are in control here. And in the intermediate term, 22.75 is an important level, but I think I would give it down to about 22.60ish before I had really any concerns. This is a very bullish looking daily chart. The weekly chart obviously as well is bullish, so don't fight trends. That's how you lose money. People have been talking all about the VIX and how, you know, the VIX is down too much. The VIX indicates that it's got to be a top and that sort of thing, and the VXX, which is the most popularly traded VIX product as far as an equity, continues to do what it does best, which is destroy shareholders' equity. It was down once again this week, and really, you know, you can't look at it and say it's down too much or whatever. It's in a downtrend. Downtrends continue longer than people expect, and you can't time your stock trades based on what the volatility index is doing. It's just a small piece of a very complicated puzzle, and it's one of the most complicated pieces there is. If you're thinking about a puzzle, this one would clearly not have edges to it. It would be somewhere in the middle with about 12 different colors. So don't spend too much time focused on that. Instead, focus on the individual setups. Last Friday, I said that it looked to me like that SunPower was a stock that looks like it's headed for a breakout and should head towards $40 a share. So it was a real nice trade in there this week. As I'd mentioned, I had calls going into the week, so it was a nice boost for those, obviously, as this stock just rocketed higher Monday morning, and hopefully you participated. If you're still involved in it, I'm not, then I would say your worst case stop would go down probably about $38.40. But it does still look like it has room to continue higher. I'm out of it because it was a trade for me and they were options that expired today. But I'll be looking at this stock for further upside potential. Another one I'm going to look at next week as far as another solar stock would be JASO. JASO isn't the best one, best looking chart out there, but it trades 2.6 million shares a day. You look at this weekly chart, it's been grinding higher, and it's just been kind of going sideways for most of this year. Now that the solar stocks have some action in them, you can see we took out an intermediate term level here at about 1058. So I'd say whatever you do in this, back below 1050 or so would be where your stop would go first. So if it breaks back below 1050, you wouldn't want to be involved in it. I'm thinking it has the possibility of going even above today's high, which is 1103, or maybe you're going to wait for it to clear the highs of this past week up at about 1131. But if it can do that, I think that it's got a very good chance of continuing up towards the highs for the year, near $13 a share. So it was up on big volume, and then relatively the volume has been diminishing as it's turned sideways and is correcting more through time rather than price. In other words, we're not seeing a strong pullback here. Instead, we're seeing that this pullback has been halted right now with a couple of days lows right near about that 1060 level and right at that rising 5-day moving average. So it tells me next week pay very close attention for this one to be able to continue to move higher. Stem Cell had a great week as well, and I'm going to talk at the end of this video about another stem cell company that I think has the potential to get going. Let's take a look at the bonds. Bonds were up today. This week we saw that they came down. Last week we were right at that 50-day moving average, which is rising, and we're basically, were we unchanged for these bonds? Or we're down slightly on the week, a third of a percentage point. But the longer-term trend for bonds is still higher here, so I don't think that you want to. It's halting at this prior support. I don't think it's time to turn bearish on this and be buying the TBT. The direction of the 50-day moving average is still higher. The direction of the 100, the 150, and the 200. So it just seems as though this market is getting a well-deserved pause. Now, gold this week had completely turned around. It broke down 2-3 weeks ago, and here we are. The problem with this, with gold and the GLD, is that it gaps so much, and that's why I don't trade it. In fact, if you look at it, we're still in this longer-term downtrend to turning neutral. We're not in an uptrend in gold on the longer-term time frame. Now, this week I think we caught a lot of shorts off guard by gapping up on Thursday, but again, it's not something that I trade. I would expect that it's likely to find a little bit of resistance, pause in this uptrend up in here, and if you were looking to get out of gold, I think this is a good opportunity to do so. Let's take a look at Apple. Apple kind of just lost a little bit of ground again this week. It's right now trapped under a declining 10-day moving average, and more importantly, on the 30-minute time frame, you can see we have this 5-day moving average, which is turning lower as well. Let's take a look at the 10-minute, and we can kind of see that what we want to see is we want to see a higher high. That is, we want to see a level of resistance, and right now we've got a little band of resistance between 92.50 and 92.75. If it got up through there, then that 5-day moving average would be turning higher, and we would want to purchase Apple. Instead, this is still saying that Apple needs a little bit more time to consolidate, maybe pull back a little bit deeper. I wouldn't be buying it long until it got back above that 92.50 to 92.75. If it can do that, then I think you're going to get that push to 100 that everyone's looking for. That certainly seems reasonable to me. A couple other setups for next week. I like the way this Fastenal looks, F-A-S-T. You can see it's been kind of turning sideways for the better part of a year, or more than a year, and right now we've got this little, what looks like a cup and a handle. I know a lot of people like to look at cups and handles, but we've got a 10-day moving average above a 20 above a 50 above the 100, etc. And on a 30-minute time frame, you can see we took out a little bit of resistance in here today after this consolidation. So now we're back above a rising 5-day moving average. This stock trades an average of 1.2 million shares. And drilling down a little bit further, I think you get it back above today's high, which was what was today's high? $50.25. Then it has the potential to be able to continue to move. If it were to just go from there, I would set my stop right under here. Another thing you might want to do is maybe nibble a little bit of it here, just above 50, if it takes out this level with a stop under there, and then add to that position. There's a lot of different ways to get to the finish line in the market. There's no one best way to trade a stock. That's why I say make the trade your own, and use, whether you're going to use options or whether you're going to spread, whether you're going to hedge, whatever. It's up to you to decide how to do it. My job at Alpha Trends and what I do each day is to guide people, to provide them with the ideas, much like a fishing guide would say, cast over there. That's where the waters have been good lately. Use this lure instead of that one. Let me tell you what's been working, and if it's wrong, I'm going to get out of here quick, and we're going to drive to another part of the river where I've heard fish are biting. That's the way it is in the market, and we've had some great winners this past week. I'm sure you did as well, because it's been a strong uptrend. So I'm not going to bore you with that. Instead, I'll provide you with some other ideas and entice you maybe to become a subscriber to Alpha Trends. VLCCF is in a nice uptrend. If it clears this past week's high, I think that it's got a chance of continuation. FAST, as I said. ISR was one I had done a blog post about, and there's a real big short position in this. Now, it is a biotech stock, but it's up at all-time highs, or I'm sorry, several year highs here. We take a look at it. I don't know what happened to the symbol there on the monthly chart. Let me fix this so we can see it more clearly. I think you've got a chance of it continuing back up towards $3.75, $4 a share. It's a biotech stock, and we've seen some resistance in this general area, 275-ish to 283, I guess. That's the band of resistance that needs to get taken out. If it does that, then perhaps some of these short sellers who are involved in the stock will begin to be motivated to cover. We're looking at the Nasdaq site right now, which shows that there's 5.1 million shares that are sold short and not covered. And that's up from 626,000 back in January. So there's a lot of shorts that have been added to this. And if you look at alphatrends.net, I did a post on it which outlined where that short interest really is. So if you're going to get involved in this, at this point, the worst case stop, I would say, goes down below 235. Again, they're a biotech stock, and those biotech stocks are riskier. Maybe those shorts know something. Maybe they don't. But do realize that there's greater risks involved in biotech stocks, and figure out for yourself whether it's something you're comfortable with or whether it's something that you want to just avoid and let go without you if it does go. Microsoft, it's a good investing stock at this point. I think it's ready to be able to continue to move higher. We've been trending higher, and I think the stock probably heads for 45. You got to be kind of patient with it, though. It's just kind of consolidating up here as it tries to go. One I do have an eye on is Navistar, NAV. You can see it's got this little trend line here, and it's consolidating and holding up much better than it has the prior couple tries to get through there. Now Navistar, probably I'm thinking above 38.03 could get going. A worst case stop probably down at about 37.20, and again, raise those stops as the stock tells you to. Once you decide to get involved, you're on your own. But we've got 11.7 million shares that haven't been covered that are short in there. That would take the shorts an average of about 12 days based on average daily volume. So that could provide some nice fuel to the upside in here as it breaks this trend line and a little bit of resistance. Perhaps we could see Navistar up towards 40 and a half. Now for that stem cell company, STEM, as I mentioned, had a great week. And here's one, CUR. This is Neuralstem, and Neuralstem, if we take a look at the monthly chart, you can see broke to an all-time high when it broke past this four and a dime. It's had a good run from $1 a share last year, but when we look at the daily chart, it's kind of come up here, and you could say that this is a left shoulder, this is a head, and maybe this being the right shoulder if you're looking for a pattern. What I see is a stock that's starting to show some decent support right in this area at about 4 and a dime would be an absolute worst case scenario for a stop. And what gets it going is tough to say. Perhaps above 455 to 460. This is another stock that has a decent short position. Let's take a look in there at CUR, and you can see that the short position in here is 7.6 million shares. Based on the average daily volume of just about 1 million shares over the last month, that would take them 7.6 days to cover, and that would be obviously help to bring in new buyers. And anyways, this one has the potential for a short squeeze. If you take a look at a measured move off of this inverted head and shoulders, you can say that the pattern is, let's just call it we'll be real conservative. We'll call it 315 up to 475. So that you'd add $1.60 to that. Obviously, that would give us a price objective of about 635. That's not where I would look to sell, but that tells me that the risk reward is good, and that type of trade would be worth taking. So it's up to you again to decide what time frame you're involved in. When I buy weekly call options, I know what my time frame is. I'm expecting to go in the near term, and I think I'll probably consider some call options in JASO, and that'll do it. Thanks for tuning in. Hope everyone had a good week, and I'll talk to you next week.